Hey Gino, thanks for taking out the time today to chat with us. Before you really get into what you guys are doing today, just kind of wanted to get your background, kind of how you got into real estate, like what really drove you to real estate, and then we'll kind of dive into what you guys are doing today.
Peter, thanks for having me on. I was a mom and pop restaurant owner. I owned one restaurant in New York. I got out of college in the early 90s, got into the restaurant business right away because my pops was in it. And for me, I loved it. I loved the business for the first 15 years or so. When 2008 came, that was like the seismic shift. I think '08 it was a big indicator. And I think the pandemic 2020 was another big like shift indicator. And for me in '08, it was like a wake up call. I'm working harder. I'm making less. I don't like what I'm doing. I see regulations. I see competition in the food industry. Everything's changing. You have the Panareas of the world coming on. You have Grubhub. How do I compete with them? And I just fell out of favor with the business. And I looked to real estate. And I met Jake in 2009, and he was a pharmaceutical rep taking food out of the restaurant, going to doctor's offices. I'm like, okay. And we struck up the conversation. He moves to Knoxville in 2011. I'm like, when you go down there, let's do multifamily. And he moves in 2011. We get together. It takes us 18 months to find the first deal in 2013. And I guess the rest is history. The only other thing I would say is I've got 6 kids, an amazing wife, and it takes time to build a business. I mean, looking at real estate as a business, as an entrepreneurial venture was one of the best things that I did, because when I had the restaurant, I didn't look at it from that perspective. I had an immigrant father who was like, you need to be there. You need to do everything. I'm going to do this. I'm going to wash the dishes. I'm going to sweep the floors. And sooner or later, Amma gets burned out. And I got burned out. That's what ended up happening. And I didn't think about processes and systems and procedures because that's not how I was raised in that business. But when I went into a different industry, everything changed. As you're starting to buy these assets and start accumulating properties, the whole goal of multifamily is to be able to scale. But you can't scale unless you put in systems and processes. And there's a conundrum. The first 100 units are great because you're doing it yourself. But then from 100 to 500, that's your next inflection point. And then from 500 to 1,000 is another inflection point. And they're exciting, they're scary. But if you don't look at it as an entrepreneurial venture, you're going to fail in this business.
Yeah, I mean, I've heard you guys' stories from Bigger Pockets back in the day when you guys went on the podcast, and I followed you guys, through at least what you guys have been able to build courses, to build everything else. So, you say it takes a long time to build a business, which I agree 100%. It doesn't happen overnight, and especially I would say, even though the high ratio of people that fall out of entrepreneurship, the ones that stay in it for the longevity, the ones that are not the Zuckerbergs and the Bezos, stuff like that, those are the mom and pops. The vast majority of them are mom and pops running a business, either 25 million or 50 million or 5 million, and it takes them 25 years to build it. So when you changed and you re-examined what business was to you after you were going after everything with Pizza Shop and everything like that, moving over to now doing real estate, is there some similarities there, or was it just completely blank slate? Let's start this over and let's build from here and make sure that the systems are proper.
That's the amazing thing that I learned is every business has so many similarities to it and so many similar processes. I'll give you one example. At the restaurant, I didn't have a mission statement. I didn't have core values. When I started scaling the education part of the business, Jake and Gino, and the real estate part, the portfolio, we started hiring property managers. We started out with the core values and the mission statement there, and then we adopted it into the education platform. You hire and you fire based on those core values. When I was at the restaurant, I kept blaming the employees. How can I blame the employees if I don't have a mission statement or if I don't have core values, really that like guiding North Star? So that's something that every business needs to have. A cadence of accountability. Did I have quarterly plannings or quarterly meetings with the restaurant? Nope. Do I have it with our company now? I just got off a quarterly meeting right now at 3:00. 6 hours we spent to figure out what our next quarter's priorities are. Did I have a weekly level 10 meeting with all of our managers at the restaurant? Nope. I have that with the education, and we have that with our property management company. Did I have daily huddles every morning, getting together with our team members saying, this is what we need to do today? Nope. But I have that with the education and the property management company. All of these different touch points are really, really important in any business. And as you're starting to scale up, having all of these things built out. I'll give you a quick example of the restaurant. Did I have systems in the restaurant? No. When somebody walked into the restaurant, did I have a simple way of greeting them? I didn't have that. Did I have a simple way of when somebody calls up and somebody answers the phone at the restaurant? Did I have a simple system for that? How they all are supposed to answer the phone the same way? Did I have a way of packing food to go? Similar. I want everyone to do it the same exact way. I didn't have that. At Chick-fil-A, everyone says my pleasure. That's a system. And I didn't have that at the restaurant, but that's what we've built out with our education company. We have a customer journey with the education company. Did I have a customer journey at the restaurant where somebody comes in, has a meal? Hey, reach back out to them with an email, send them a thank you card if they do a catering. All of these things I didn't think of because I was working, in the business every day. I wasn't working on the business. And I think every business owner and entrepreneur needs to understand that if you want to scale a business, and that's what the idea is, to be able to scale it, to pull yourself out of those daily routines and to find what your highest and best use is, and to do stuff that you truly enjoy. Like, I love being on these podcasts. I love writing books. I love doing the events for the students. I love to do coaching. These are all things that I love to do, but I can't do them if I'm doing all of the mundane tasks that somebody else should be doing. If I'm doing bookkeeping or if I'm packing swag boxes, I can't do this other stuff. And I was doing that at the restaurant. And I think as a business owner, as you start growing, Ken Clothier says it best, Peter. He says, basically, the person that you begin with is not the person you're going to end up with. You start having all these different inflection points. The I'm a mentality, I'm going to do this and I'm going to do that, works really good for the first 50, 60, 70, 100 units. After that you have to shed that I'm a mentality and start finding people who can help you out on this journey.
Do you think it's easier for you from looking back, just being a one-man band? I mean, granted, I know you had people around you in the restaurant, but is it easier now? Systems are going to be a factor in this answer, but is it easier now that you're bigger, right, versus when you were small?
Absolutely, because when you're bigger, you can hire quality people. One of the problems with the restaurant business was I couldn't hire quality people because I couldn't pay them enough, or at least I didn't think I could, right? Because I was always focusing on just what I was going to make. I was going against my short-term profits versus the long-term vision. So if I would thought of it at the restaurant to say, hey, I'm going to hire a full-time amazing chef and really pay him and get a sous chef, that's going to take profitability away from me in the short term. But in the longer term, I could probably generate more profits because I'm focusing on higher tasks, whether that's catering for bar mitzvahs or doing offsite weddings or having maybe a food truck or writing more cookbooks or doing more physical products. That's building the brand, that's building the business, but you have to take a short-term hit to do that long-term vision. And that was very hard for me at the restaurant because I wasn't wired that way. Now, as far as the education, it's difficult because marketing is really, you have to spend a ton of money on marketing. People think you get lucky with Instagram videos and all that and YouTube. No, you need to spend dollars on marketing and to spend them wisely. You need to get good at that, at what you're doing there. But I mean, focusing on those tasks is what I think will make somebody successful.
Yeah, I mean, it's especially focusing on tasks that you can redefine each week, like marketing specifically, like you said. You got to spend dollars, but you got to be smart about it, and you got to make sure that you're redefining what that is. So not reinventing the wheel each week, but go in there and say, okay, well, why aren't we getting a response? What could we do to get a response, and then adding those things in and see if there is a response. And if there's not, then add some more, take away some more to really refine what you're doing. And then ultimately you can finally get that response, kind of like what you guys have done, with your business over the years. I mean, it sounds like you guys have been in business for, 10 plus years. So you guys have been able to see the market and the landscape change a lot. And then also it's, I bet you that first 18 months before you got that first deal, it was, why aren't we getting deals? What are we doing? And then it's, not self-destructive, but you're like, you get down on yourself. So I guess through, talking that out, my next question would be like, how were you guys able to get from, 18 months of not finding a deal, especially with probably deals all around you, but not within your parameters, especially at that time of real estate? How did you guys get through that 18 months mentally?
Well, the first few months were okay, but then Jake's fiance moves down and he stopped looking for a couple of months. But I had a big enough pain to not quit. The pain of me not doing it was greater than the pain of me sitting around and just staying at the restaurant. So I always thought to myself, I need to do this. I have a big enough why. I have 6 children. How am I going to pay for their college? How am I going to pay for all these additional expenses? So I had a big enough why. And Nietzsche says it, if your why is big enough, you're going to figure out how to do it. And that's what I ended up doing. It did take us 18 months because we didn't have parameters. We didn't have a buy rate criteria. We were just looking for deals. What does that mean? That's why it took us 18 months, because what's a deal? I mean, we didn't know. We weren't focusing on number of units, median income, unit mix, vintage. We were just going out there looking. And there were a lot of deals, Peter, at the time. It's just there was no capital. Nobody could fund these deals. So it was a lot different. GDP was 1%. Rents were $300 for a 1-bedroom back then. So it was a different landscape. I didn't understand market cycles. So that's why it took us a lot longer. But when we did get that first deal, things started clicking. You have that behavior that you're belief driven. I just did my first one. 3 months after that first one, we got our second deal. And then 6 months after the second deal, we got the third deal. And I wish I had a Jake and Gino. I wish I had an education company out there that could really show me the buy right, the manage right, the finance right. I had other education companies. I had other mentorships that were teaching me. One of them was more syndication based. We didn't do syndication at the time, and it just took a little bit longer. But for us, it was always, Jake had that pain point of leaving the pharmaceutical industry because all of a sudden that industry changed as well. So we were both really wanting to do this together. We both saw the future of it, and we both put in a ton of time. We both had expectations of what we needed to do. And fortunately for us, we didn't quit. We found a good broker who believed in us. And as they say, the rest is history.
Yeah. I mean, I think that goes through what we were talking about a little bit ago is, those entrepreneurs, they could be in it for 25, 30 years. It's a long game, even more so. So you build that grit and you build that tenacity throughout the whole process. And if you don't have it, even when it's grim with, market conditions and market going down, yeah, granted, it's great when it's going up, but when it's going down, that's really when the grit comes into play, and you have to apply that through those times.
But Peter, it's funny you say that when the market goes up, because when the market goes up, people a year or two ago weren't enjoying the education because the market was too hot. There's no deals.
Yeah.
Now people are complaining that there's a recession, the rates are high, so they're not doing it now. So you can always find an excuse. That's the problem. I mean, you just have to understand what we call the 3 pillars of real estate. It's market cycle, debt, and exit strategy. You can buy real estate when it's going up, and you can buy it when it's going down. You just have to know the different levers you're pulling, whether you're using creative financing, whether you're buying this thing to hold it for long term, whether you're buying it on bridge debt, whatever the cycle is. It's not the real estate. It's the person trying to execute it and understanding all of the different strategies. We all look great when the market's going up, but now there's a lot of risk. Now people have overpaid, and is it going to decelerate or take a big hit? It may not. I think it's more market specific. If you're in a tertiary market where people are leaving, there's jobs being lost, you may have some pain. But there's a lot of markets where there's just not enough supply. There's a lot of money still out there. So let's work through this money. Let's work through these interest rates going up, and hopefully some of these prices will start dropping.
Yeah. I mean, what do you think for you guys? What have you guys been doing the past couple? Granted, the past couple of years it's been fire, in the sense of everybody's been diving in. They've been paying over, a lot over, just single family residents up to multifamily. So how did your guys' buy box change or parameters change the last couple of years? And how are you going to change it going forward?
Peter, that's a great question. And that's one of the first things that I hear when students want to join or they're just on bigger pockets. I need to find deals. I need deal flow. And I say, time out. What does a deal look like to you? I mean, that's the first thing. What is your business plan? Do you have an exit strategy for what you're looking for? And our buy right criteria has changed over the last couple of years. As cap rates were compressing and B and C properties were around the same cap rates, we're buying newer properties. So this part of the cycle, we want to buy anything in the 80s, mid 80s and newer because there's less CapEx. We're looking for ourselves. I mean, anything 100 units plus the last couple of years, those properties have really been bid up by private equity. There hasn't been a lot of value for us. So believe it or not, we've bought 5 deals in the last year, 40 units, 26 units, 21 units, 12 units. We bought a 16-unit property, but they've all checked a lot of our parameters. We like 2 bedrooms. We love townhomes if we can find them. We like properties that have amenities like washer, dryer, hookups. we're looking at median incomes of $50,000 plus. Now that's us specifically. So when a deal comes by that has all those parameters, bam, we're going to go after that. Now that's this part of the market cycle. Let's say the market cycle shifts in the next year and all of a sudden prices, they start dropping for those older assets. Well, let's focus on it. And it's not to say that I'm not going to buy a 1960s asset, but I'm not going to pay a 3 cap on that property right now because there's a lot of problems with those properties, whether it's plumbing, roofs, the budgets don't make sense. But back in 2013, 14, and 15, when those prices were so suppressed, you were able to add a ton of value and flip out. And, our model right now is also, we have a lot of employees. So we want to be able to buy these properties and include our employees into buying these properties. So build culture that way. And there's no better words that you can hear than a property manager saying, we need to raise rents because they own part of that asset. It's just amazing. We're just on the quarterly plan. They're like, you know what? We're refining this deal. And they all have a little piece of it. One's getting $30,000. One's getting an $80,000 check. One's getting $10,000. That is really building culture and actually letting them see that the model really works. You're adding value to the property, but you're also becoming a steward. You're also participating in the profit. So for everybody out there, figure out what your buy right criteria is. And for everybody, it's different. I mean, like if you're syndicating deals, it may be one type of criteria. If you're buying JV deals yourself, it may be another type of criteria. What market are you in? I mean, if you're in a market that doesn't have any new assets, you maybe have to buy older assets. In our market of Knoxville, we love 3 bedrooms, not many 3 bedrooms. So when a property comes up with 3 beds, we want to buy that property. And the other thing we've been getting into in the last year and a half is we've been buying property to be able to build to rent. We want to build duplexes in the build to rent space, but that's more of a long-term kind of thing, 24 to 36 month process. And it's one of those, got to figure it out. Haven't done it yet. We're going through the whole process of engineering and getting all the permits. It's a long process, but that's something that I think we can take it slow. And you want to be able to build new assets like that and hold those for the long term. That's something that we're really excited about.
Dude, that's huge. I mean, especially getting more buy-in from your employees, right? Mm-hmm. Actually having them stakeholders, just like they would be stakeholders in a company, like an ESOP or something like that. You have stakeholder, and now they're more vested with the property. I mean, not the property, but the business, and obviously the property too. But they're willing to go even farther to make sure that property's good. If they're the asset manager or property manager, whoever they are, they're willing to go that much farther versus hey, I'm just getting a paycheck.
Mm-hmm. And Peter, it's the same thing with the Jake and Gino education. Everyone on our team, if they're come with the company for 2 years, I've got our sales guys, they've invested in properties. So they're selling multifamily education, but they're invested in the asset as well. If you're going to sell a BMW, you better be driving a BMW. You better not be driving a Chevy. So that's my only point. They're not investing in the single family space or self-storage. They're investing in multifamily. So when they talk about multifamily, they're invested in the asset. To me, that's important. You need to have that you have to be the congruity to be able to sell it, the education, and to be able to invest in that asset as well.
Yeah, for sure. I mean, you gotta, if you're selling it, you gotta know the product in and out. And I think, it's the same thing. Like, go through a home purchase if you're a real estate agent, on your own to really know those pain points of what those people feel like versus, not knowing it at all and just being a renter. That nothing wrong with that, but you got to really know the processes and what you go through so you can speak on those in a real life example.
Mm-hmm. I agree.
So looking forward for you guys, educational space wise, what do you guys have planned for that? Especially, adding more courses, adding more value add things to students that are coming in.
For us, we have a Multifamily Mastery 5, November 5th and 6th. That's our flagship event every year. It's in Orlando. That's more of an open event. We have 870 tickets sold. So we're probably gonna have 1,000 tickets sold for that event. We did 850 last year. And that's where we just want to have one yearly event where we get, it's an open process. So not it's for students, but for non-students as well. And for us, not creating really any courses, we have the fulfillment as well. When students become mentorship students, we do have lower level courses, the micro courses and all that. But for us, I built a company we really call it the white glove service of multifamily. We think coaching is important. I became a life coach. I saw the change in that. I had coaches for real estate. We had coaches to scale up the business. And I saw when you had coaching, it really helps from an accountability perspective, getting on these calls with these coaches and doing the work as well, it was just a huge component for us. So we love the coaching aspect of it. And as far as when you become a mentorship student, we have 5 internal events every year where people are able to come to boot camps and to come and hang out with our students. So those are 2 things that we've really been focusing on as far as the mentorship goes. And for me, I mean, investing in your education is just so important. And we've continued to do that. And I will continue to do it. I'm actually taking acting lessons as well. So whenever you're learning different ventures, I'm taking singing lessons. I'm singing opera right now. So whenever I want to learn something, why would I go on YouTube and try to do it by myself? I'd rather hire somebody who's an expert at it, or who's done it, who has success in it, mirror and model them. So when I have a question or I can't hit a note or I'm doing the wrong technique, they can correct me right on the spot and not make me create bad habits. So I'm just practicing what I'm preaching. And for me, it's served me so well to be able to do that. And like I said, the accountability is important. If I don't feel like doing something and I'm by myself, I'm not going to do it. But if I have somebody who's waiting on me or I've spent money on it, I'm going to get myself ready. I need to extract as much value as possible from that situation. Does that make sense?
Yeah, for sure. No, 100%. I mean, I think a lot of people miss that. You have, and I know, this is talked about so many times. So you probably heard podcasts and people speaking about it. But like, the Michael Jordans and everybody else, like they had a coach too. In the, they have a hitting. If you go to baseball, you get a hitting coach, and then you have the main coach. You have a catching coach. All those other things that are specific to your job. There's a coach around it, and those athletes, the people that are very, very professional and getting paid high dollar value, they have coaches for specific things. So you hear that, and you can't just blow that off and say, well, I don't think that that's right for me. And you want to be professional in that space. It's like, well,
success leaves clues. That's all I have to say about that. You look at people who are successful, and they have voice coaches. These people who are speakers, they have the accountability coach, they have the mindset coach, they have all these different. I mean, I think Jordan had like 10 different coaches. He had coaches for business. I mean, like, do you think Jordan just quit the game and just went in and started buying the Charlotte Hornets? You don't think he had people coaching him on that? I mean, you know what I'm saying? Like when he went to baseball, do you think he just quit basketball and just went right into baseball? Don't you think he had people coaching him and teaching him how to do that? I mean, of course he did.
Oh, for sure. Yeah. I mean, you have to at that point, like you're going to that level. I mean, like I hear so many times that, the step from like college football to like pros, like guys get in and they're like, the speed is 10 times what I thought it was going to be. And to get to that level, you see some of these athletes that get to a different place physically and mentally between like the summer of going from college to pro. So same thing. And it may not take you a summer to get there. It may take you, 5, 6, 10 years, right? But as you put that time in and effort, you're going to be way more successful than, the person that's just kind of throwing it around as a hobby.
I agree 100%. I do.
So, when you guys started buying properties, what was, I know you guys didn't have parameters. When you started honing in on those parameters, what were you guys looking for?
Well, for us, we were within a 3-hour radius of Knoxville because we were vertically integrated. We were managing our own properties. So that was the thing we were focusing on. I mean, everyone calls value add. We're looking in the B and C space for value add properties. But for us, it wasn't just going in and spending $10K a door. It was going in and seeing if we could really raise these rents. And that's what's been going on in this part of the cycle right now. You can go in and not spend any money and just raise rents and just take care of the customer journey. What our focus really is on now is trying to be the Chick-fil-A of apartments. That's what Jake calls it. And that blue ocean strategy in the C space where a lot of these residents are neglected. They're not serviced as well. Every time we took a property over, we saw that, wow, all these maintenance orders, the customer service was terrible. Clean the properties up. That's really what our focus was. And just scaling up. We should have probably syndicated more earlier on. We didn't. And maybe that's a good thing or a bad thing. But what ended up happening was we became really clear on what we wanted. We wanted to become the small giants. I don't know if you've ever read the book by Bold Burlingham. It's a great book. Yeah. And we don't need to buy 2,000 or 3,000 units a year. We'd rather buy 200 or 300 really good quality units and focus on what we call the PPU, the profit per unit, because we own the deals ourselves. So if our assets can be a lot more profitable per unit, we're happy with that. We don't need to have as many units. Now, if you're starting out and you're syndicating, you may not have as much equity in the deals, but you're getting more units and you're getting more fees. And then all of a sudden, our students and our coaches go through this. They start out with a syndication model because they don't have the money. But then when they start going full cycle, they start getting some equity checks. All of a sudden they say, hey, that 20 unit looks really good. I can own that with somebody else and I've got all that equity, and they downshift. But being able to have all of that, syndicating deals, buying deals on your own, I think that's really important. And for us, we've just put a pause on syndication. We're just looking for deals internally that we have enough capital to take down. And if an opportunity comes with a $50 or $60 million asset that we can't, we've got investors, we've got friends that can take that asset down.
Yeah. Do you guys, so how long were you guys syndicating for?
We syndicated our first asset in November of 2018. Then we bought another asset in October that year. And then we bought another syndication in mid 2019. We went full cycle on 2 of them, and we still own 1 right now. So the rest of our assets are just held by me, Jake, and another partner, and some other people in the deals, whether they're employees or my brothers in on some of the deals as well.
Yeah. And for now, you guys are just employee-based financing, and okay.
Yes.
And do you think that you're going to continue that path for the next couple of years, or are you guys going to try to get back into syndication? What does that look like?
It's a great question. For the foreseeable future, we're able to refi a lot of these deals out. We still have a lot of equity in these deals, so we're refinancing these deals, and we're just putting that money on the side to be able to fund the next purchase. And like I said, Peter, it's really, we want to grow intelligently, and we don't want to, the whole Chick-fil-A model, outgrow our infrastructure, whether it's on the education side or the property management side, the syndication side. I think a lot of syndicators get caught up early on by scaling real quick, and they don't have their systems in place, whether it's for their investors or whether it's for their managing the third-party property management, the asset management. We made that mistake. We went from like 600 units to 1,000. We didn't have a COO. We didn't have like regional managers in place, and that was painful for a little while. So we realized, if there's deals out there, Peter, it's really market specific, because if 500 or 600 units comes online, we're going to try to take those down. It hasn't, the opportunity's only been a couple hundred. What we need to be worried about is if we have a couple of really heavy lifts. We just went through a 25 unit repositioning. It takes a lot of bandwidth because we have flooring in house as well. So our CapEx crew is doing all our flooring turns. But when we take a big asset that has a lot of hair on it, as they say, well, that gets off the CapEx and it has to go turn those units. So we have less people doing flooring. So we've just got to have a balance of, wow, we've got a 100-unit property. We need to take that in-house. We can do one of those heavy lifts a year, and then we have to focus on assets that are more stabilized.
So you guys have flooring in-house? Do you guys have painters in-house too, or no?
Painters is like the bane of any multifamilies. It's one of those things where you just can't, you can sub out and do a better job with painters. It's just, you have to be careful with the cost. It's the three biggest expenses in multifamily. We keep joking around. I got to create an infographic. It's painting, flooring, and supplies. PFS. Those are the 3 biggest expenses in multifamily. And I mean, painting is a difficult, it's a hard thing. It's a hard task. Painters are crazy dudes. When you get them there, it's a tough job, and we can't do it in-house as well. Better just sub it out, and we have that subbed out. But as far as the flooring, it took us several years to get flooring in-house. We've got 2 crews now. We're actually talking today. One guy had an appendicitis, guy's appendix removed, and another guy's on vacation for a little while. So that one crew is down, and we've had turns going on. So going back and forth and managing that process, and you understand what's going on with labor. It's been challenging to actually staff up as well, because Amazon's opening up all these warehouses. So instead of people doing maintenance jobs, they're going to work at Amazon for benefits and for probably the same pay for an easier job. So you're competing with that as well in the multifamily space.
Yeah, for sure. I mean, I think, there's twofold, right? Because you have the ability that Amazon's coming in and building more tilt-ups, but there's more jobs, and you can increase that rent, right?
Yes,
but at the same time, then you're like, well, on the flip side, I'm struggling with labor.
Yes. Life is never perfect. There's always a pro and a con, right? Yeah. It's great. Asset prices going up and making more money, but there's no deals. And then when asset prices go down and you're in a recession, well, I'm not making as much because there's less income coming in. And, when the market is really hot, you can't find labor, right? And when the market's really soft, well, maybe you don't need that labor. So you got to find a balance there in life.
Yeah, for sure. I mean, especially when the market gets soft, then that, the talent goes on sale, because the last like 3-4 years, trying to hire someone, it's like, I got an offer for 100,000. match it. You're like, well,
Mm-hmm.
I offered you 60, so no. So yeah, there's no way I can match that. And then
Uh-huh.
just go off. So yeah, now I think in the next couple of years you'll be able to probably build that, flooring avenue a lot easier,
Yes.
and then ultimately, that supply chain is going to change too.
Mm-hmm.
So it'll put you guys right in the mix, and I think you guys are in a perfect sweet spot where Knoxville, there's some places in not Orange County, but just outside of Orange County that Amazon's really come into
Mm-hmm.
up too. So I think you guys are in a sweet spot where you guys will have the labor. People have moved to Knoxville and
Yes.
Tennessee, so you have that possibility, in the next 2 years, and then at the same time, you can increase those rents because there's going to be a lot more people around too. So you
Mm-hmm.
guys have a twofold that you and I probably couldn't have really talked about in 2019, 2018 because we didn't see what was going to happen, with everything else, that was coming up in
Mm-hmm.
2020. So,
Mm-hmm.
so how does it? So talk me through. You guys find a deal. How does it go with you guys finding a deal? You guys still work with a broker, right? And then they bring you the deal. You run through the numbers. Who's running the numbers, and then also who's the asset manager taking that place?
We have a company called Rand Partners, and we have one person dedicated to working Rand Partners right now. He's actually on the property management side, but he's transitioning over. And listen, you have to network with brokers. That's the biggest place where you're going to get deals. Jake has got good relationships with brokers in Knoxville. We also have these two guys who work with us. We call them the deal dogs. They go out. Their job is they hunt for mobile home parks, but when they find multifamily, they'll send us over the lead. We compensate them 1%. Great job for them, and for us it's getting lead flow as well. But honestly, the biggest one is just you have to talk to brokers, and I think brokers, they're seeing that it's getting tougher, and they're seeing that a lot of listings and a lot of sellers are just asking for too much, and it's good. I think things are going to start shifting from that perspective. But deals come in, our guy at Rand Partners underwrites the deal. If it looks good, sends it over to Jake. Me and Jake do a powwow. We figure out what price point we want to get in on. And I think, Peter, the hardest thing that we've seen in this part of the cycle is you need to be quick. You cannot wait 2 weeks to get an offer in or LOI in. If you see a deal that makes sense, and we know parameters, we know price per door, we know what rents should be, we know what expenses should be. So at the very least, when you're underwriting these deals, be an expert in your market. Understand that if a deal comes in, it's being sold for 90 a door and rents can go to 1,200. You don't have to underwrite the deal. Just put the offer in because you don't have time right now to waste. So understanding the market and putting that offer in as quickly as possible and getting an LOI in there as quickly as possible and getting guidance from the broker. Those are all things that are really important in this part of the cycle.
Yeah, no, I agree. I think, and I think, always the speed to lead, any leads come in and everything else, jumping on them and making sure you guys do the due diligence right away. Because, just like wholesalers in the single family space, they got multiple people because what happens is they go to one person and the person takes 2 weeks to look at the property, and then it's already gone because they have a list of 100 1,000 people that are looking at the same deal because they don't want to be left in the wind, and you got to get a deal and they got to sell it. So same thing, and then for at least structure wise, as you guys look towards the future on educational space and everything else, do you guys still plan to do heavy multifamily and then still bring in the education as you guys have been doing one event a year and everything like that? Or is there any bigger goals that you guys have set in place?
For us, we really call it. I mean, I have the book here, The Honeybee, and it's called Complementary Streams of Revenue. We wrote the book a couple of years ago, and The Honeybee talks about it in the story. If you're going to start a business, there are so many complementary streams to that business. So if we're in the multifamily space, we're teaching multifamily education. I mean, I'm not going to start teaching about buying car washes because that's not part of the niche, right? So for us, we're focused on that. Development is part of multifamily. We're going to be developing multifamily properties. The only other thing that I would add to the education is I have something called the Personal Finance Academy for young adults. My passion is really to teach younger people about renting an apartment, about renter's insurance, about house hacking, about your credit scores. So I'm focused on that as well. And it's also mindset and goal setting. I've learned so much over the years about mindset and goal setting that, it's all up here. I mean, it really is. I mean, like, it's unfortunate. what the pandemic has done to people. And the people who have really succeeded have had that strong mindset. And like you said the word grit. If there's anything we can teach our young adults and our children, is to be persistent. And it's okay to fail, to have that growth mindset and to say, you know what, I screwed up this time, but what did I learn? And it's really, really hard. We all want it today. It's not going to happen today. It may take a couple more days, but being persistent and staying true to what you believe, and having that mindset and figure out what goals you want to achieve are really important. And also having that values-based decision making. Nobody ever talks about what their values are and creating goals based on values. These are things that no one talks about until you become an adult. And then when you do, you're either in the corporate world. No one talks about that in the corporate world. And as entrepreneurs, we don't focus on that. We're only focusing on building businesses and making money. But are you building the right business? Do you have the right business plan for yourself? We all have different, like I said, our goals of being small giant. I don't want to be Facebook. I don't want to be a Google. I want to be a small giant where I can control the culture of my company, where I can have it more of a family feel, where I can actually know my employees and I know all of my students. That's what Gino and Jake want. That may not be what Peter wants, but sometimes Gino and Jake don't think about that until it's too late. So think about that on the front end and try to build your business based on those parameters.
Do you guys, going back to mission and core values, do you guys ever change those as you guys evolve?
Great question.
Have you guys?
Yeah. Well, I've changed the BHAG, our big, hairy, audacious goal for Jake and Gino. We were talking about to be the white glove service of multifamily by achieving an NPS score of 85 or greater, which is an NPS is a net promoter score. And to me, sending out surveys to the students was working, but they weren't getting enough responses. So I wanted to change the big, hairy, audacious goal is to have 1,000 students quit their W-2s by the year 2030. That's a pretty big stretch goal for the next 8 years. We've got 87 students so far that have quit their W-2s. So to me, I want to have that. So you do evolve stuff and you see stuff going on. And we have other parameters. I mean, our students have closed 54,000 units to date. I'd like to see that number 75,000 by the end of next year. I want to be able to donate 1 million meals to Second Harvest by the year 2030. We've got 213,000 donated so far. So there's all different goals, but the mission really is to create communities that allow people to become the best versions of themselves. So that's what our mission as a whole entire company is. And then we have all these different KPIs and sub goals that we're looking at. But the core values took us about a good year to flesh them out. Those 5 core values, they've stayed the same, and they're not just on the wall. They're people first. They're not just marketing. It's, extreme ownership, unwavering ethics, make it happen, and growth mindset. Those are our 5 goals. So when we look at something in our 5 core values, when we look at something, we really want to look at through the lens of that. Hiring and firing, whether it's our vendors and even onboarding some students. Sometimes when you're onboarding a mentorship student, if they don't have growth mindset, sometimes it's better to pass on a student. It may not be a good fit because that one apple can spoil the well. So making sure that students fit that core value, and vendors and obviously employees, they have to really fit those. Build those out. Take time to build out what your core values are and start adhering and put them everywhere. Let everyone see them and talk core values. Talk people first. Talk growth mindset, and always continue to live by those core values.
Yeah, for sure. I mean, when you apply those to an employee and stuff like that, have you seen lifestyle changes? In the sense of talking about like how your passion project is, finances for renters and stuff like that, or at least some type of financial advisory. Have you seen same thing? You apply that core value towards employees and stuff like that. Have you seen them change? Like, okay, well, the first 3 months, 6 months, they were at their job position and they had this mindset, but then they interjected those core values that you guys applied, and it completely changed.
I can obviously for the employees, absolutely, but even more the Jake and Gino students, because the students come on board and what they think they're going to be getting is a multifamily education, which they do. But then all of a sudden they're in a community that's like-minded, that actually talks about business and entrepreneurship and talks about growth mindset and talks about reading books that their friends are watching Netflix and their friends are hanging out going to bars. But our students aren't not interested in that. They're interested in building a business and into becoming financially free. And when you start talking that lingo and you start getting people together in a room and make it a tribe or a community, all of a sudden Mary did a deal. Well, John's inspired because Mary did a deal. And all of a sudden John does a deal and Jack sees that John did a deal, and the thing starts to grow and to grow. And that's what I see a lot in with the community. I'm trying to think of all the core values, and all the core values are and it's all about growth mindset for us in that
Yes.
community. And when students come on board and go, I never heard any of this stuff before. I never heard of people just getting together and talking about multifamily, because their friends are worried about different things. And it's hard because that's your peer group personally, but professionally, if you want to take it to the next level or you want to build a business, you have to find the group that really fits with you and that resonates with your values.
Yeah, for sure. No, I mean, you do. And that's kind of going back to the coach thing and the conversation we had there. Those people build you up, and then also you're surrounding people that you talk to and
Mm-hmm.
stay with. They also build you up and put you into a different bracket mentally and financially too, depending on who you're hanging out with and who you're having conversations with. Some
Mm-hmm.
people just, hey, I'm gonna, hit the 40 hours of work, week of work, and then after that I'm going to go do my small vacation and then come back to it. Well, there's nothing wrong with that, but if you want to level up and own your own business, or get to the next level in your business, or get to the next level on investing, you gotta switch gears and go
Mm-hmm.
some other people and have conversations with people like you and other people that are around that really add value to those people.
Mm-hmm.
So we'll switch gears here for a second. I have a couple last few questions before we get you out of here, Gino. Is there any online resource or anything that you guys use to make the systems better and more malleable for your company?
As far as systems goes, everyone has all the different platforms. I mean, there's so many different that we use.
Yeah.
We use Kajabi for our learning management system. Kajabi is great, where we house all of our software. A lot of our employees like to use Asana. That's something that people use. We're using Groundbreaker right now for our RAN partners platform, as far as the customer service and the CRM for our RAN partners. We use ActiveCampaign as well. That's another CRM that we like to use. Believe it or not, Google Sheets and Google Docs is a great. I mean, it's a lifesaver for us. I think it's great. What else do we use? Believe it or not, YouTube is a pretty good place to put videos and do virtual tours. We've been using that for a while as well. So I think for us, I like Kajabi. I think anyone who has any kind of videos and wants to do some kinds of trainings, it's a great platform to make it really look professional, throw up micro courses, and just start selling education. It's a great platform.
For sure. And what about, you held up one book, Honeybee? Is that
Yes, the Honeybee, yes.
What is there any other book that, as you grew this business, that you've utilized to help you get to the next level?
I was on a podcast with Alex Hormozy about 6 months ago. We had him on the show, and he mentioned a book from 0 to 100 million. I don't know what the author is, but it's a great book because it talks about inflection points from 0 to 1 million, then from 1 million to 5 million, then 5 to 10, then 10 to 50. And I've seen our journey very closely mirror the journey of scaling a company and seeing what steps you need to do to start growing your business. It's very, very relevant to real estate. It's really relevant to the education space, but as far as syndications as well, equity under management, all that kind of stuff. As you're scaling up, what do you need to do? In real estate, buying that first deal. Don't worry about anything else. Don't worry about systems. Focusing on deal underwriting and investors. That's all you need to do in the beginning. And then as you start scaling up, well, then you might bring an acquisitions person. You may bring a person who helps you out with social media. You may be bringing on a person who helps you out with investor relations. But knowing when to do that and how to do that and who to hire, that's a really, really big lesson to learn as an entrepreneur. And that book really helps you out.
Okay. All right, cool. Yeah, I'll put that in the show notes. And then is there anything that, I know we went through a ton of different topics. Is there anything that I should have asked you that I didn't?
There's so many things you could have asked me that you did. I could speak for hours on real estate. I think ultimately, if you're going to get into any venture in life, and investing is great, why the vehicle? Why crypto? Nothing wrong with crypto. Not for me. Why stocks? And if you have big enough reason why, then you'll figure out how. For me, multifamily made all the sense in the world early on. I had the restaurant. I couldn't fix and flip homes and work at the restaurant at the same time. I could, quote unquote, do it passively, and I could make cash flow every month. So I'm like, okay, I can do it. And then at some point, when I had enough units, I could leave. I couldn't see myself doing that with fixing and flipping or single family homes. So I'm not here to tell you that multifamily is better than single family, although to me, there's no comparison. But if you're comfortable in single family and you're crushing that space, just know why you're doing it. And if your reason why you're doing single family is to scale up and get into multifamily, well, stop what you're doing and go to multifamily right now, because I think most people stay in the single family home space because it's comfortable and it's easy. But I mean, you have 100 single family homes or you have 250 unit complexes. There's no, that's brain, 100 single family homes is brain damage. 250 units is, there's no comparison. It's so much easier. There's no comparison. So just figure out why you're doing something. And if you figure out why, then you'll figure out how to do it.
For sure. Yeah. You got to have that why, to have that grit to get through it. Well, cool, man. This has been great, dude. Especially going through everything, going through your story here, and from small business all the way up to what you guys have built today. You and Jake, it's been enlightening, at least talking about that, and then also talking about a little bit of multifamily as well. So I appreciate you getting on here today.
My pleasure, Peter. Anytime.
Cool, man. Well, have a great day, dude. We'll talk soon.
Thanks, Peter. Take care.